Hey everybody, welcome to Train Capital Exclusive Analysis. Today's video we're discussing natural gas and oil, touching base on the energy market and potentially some bullish setups that are about to occur. So obviously everybody knows on Friday it was an absolute decimation of the markets. QQQ bloodbath, S&P negative, Russell closed positive. Nat Gas bulls as of Friday actually also closed the session positive, up 0.88% and actually wicked higher. Tried having an attempt at an intraday breakout, but got slightly rejected, but still putting in a nice four daily higher candles on the daily chart. You're gapping up in the futures. You actually hit a bit of a resistance point at just a pierce of 198, getting a slight reversal back down. But Nat Gas right now in the futures, slightly positive, really just flat on the session, trying to build and start the week out off on a positive note and continue trending higher. Now, what is happening with this Nat Gas price action? It just seems like it's been stuck in this range now for a few weeks and not really doing much in terms of creating a pattern. But there actually is some potential bullish pattern here that is unfolding. We're trying to establish ourselves above this key weekly gap fill support zone that I've been discussing that goes all the way back to 2020. And you can see the last couple attempts for the bulls sell off, it got defended. Sell off again, it got defended. So there might be one more final retest of this area this week before you potentially create a little bit of this W pattern and then take off. But as of now, I'm still expecting in the near term Nat Gas to push higher. I'm watching to see whether or not this breakout trend line holds, as well as whether this 186 level. As long as we're above those two areas, 186 and this breakout trend line, I remain more bullish on Nat Gas. What I did like seeing in Nat Gas, equity resource stocks on Friday, even though the market got absolutely slaughtered, look at AR. It actually closed up 1.49% in a weak market. You look at EQT, that's another one that closed up 1.19% in a weak market. How about LNG? That's another one that has actually made a bullish reversal and breakout to the upside. Look at this potential inverted head and shoulders, which gives you a fairly decent upsize target, about a $10 move to the upside for LNG, which could happen in pretty short succession here. So despite despite the market being weak, a lot of these equity resource stocks in the Nat Gas space showed absolutely stellar price action, which means that we could see Nat Gas move higher in the coming weeks, which is likely what is playing out into the thesis. The fact that you're consolidating above that 20-day moving average here in blue and looking to push higher is a positive sign in the near term. Let's look at oil. Oil had that massive spike on Friday in the futures back up to 85.50 on escalations of Iran and Israel bombing one of Iran's nuclear sites. And then throughout the market session, regular trading hours, that move got absolutely faded and reversed back to the downside. So really it was kind of a one-off news-based blip on the chart. Very short-lived, so it really didn't have that meaningful impact on the overall indices. Needless to say, right now oil is just consolidating between an 84 resistance zone, that was our breakout target one, and these previous pivot highs. You could retest these previous pivot highs at $79 and $79.50. However, $80 is a whole psychological number where the bulls will likely want to defend this area, because this is where you had your previous flag pattern consolidation. The low of that flag really sits at about $80.20 on the WTI crude chart. So as long as crude stays above this $80.20 level, you could actually continue to march higher and create a little bit of a higher high and higher low pattern in the near term. If crude oil starts to fall precipitously, that's positive for the interest rate expectations. It's positive for the CPI. The next CPI is going to be a bit tricky because I do think it can be still sticky. Overall, watch crude, watch gasoline futures. Commodities have been strong, so expect this potential trend to continue. If it is a reflationary trend, the dollar is going to have to come out swinging and flexing its muscles. So I'm watching this DXY consolidation closely, because this one has had a technical breakout out of a long-term base, and you can see that if the Dixie clears this 107 level, I mean, there's really no stopping it until you get to your previous 2019 pivot highs. And if the dollar were to get past this 107.40 area, something is terribly wrong. and would not be good for the overall global health of equities and really pretty much any sort of other fiat monetary system outside of the dollar reserve system. There would be a lot of weakness elsewhere. On that note, thank you all for watching this video. If you're interested to see how I'm trading Nat Gas moving forward, as it is shaping up for a fairly large move here in the coming sessions, definitely visit tradingcapital.ca, where I'll be able to help you out through our membership program. Take care, everybody. We'll see you on the charts a bit later.